Hello everyone and welcome to Investing Angles. Today we will do something different, something new we haven't done before, but we did it on our website. We did this analytics a couple of months ago, but right now we think that this is important. So what we are going to do is to discuss the major S&P 500 sectors such as financial, health, technology, industrial, utility, consumer discretionary, energy from the candlestick perspective. And also we'll deep dive into multiple stocks that form these sectors and see what's going on there. So this perspective is important, and I think that was that helped us before to mark the major turns that are coming for the index. And this is something unusual we are seeing right now, and we would like to look at it from the lens of the candlesticks. But before we get started, make sure to subscribe to our channel and also check our website for a free reader package. So as we speak, we are posting multiple analysis right now, and some of them are free, so you'll have a chance to have a look at this firsthand. All right, so let's get started. So what we are seeing right now. So this is the map of 8 major sectors of S&P 500, such as financial, technology, healthcare, consumer discretionary, industrial, consumer staples, utilities, and energy. So what we are seeing here, so that 6 sectors out of 8 closed the week with strong bearish formations, and namely only the technology sector and consumer discretionary were able to avoid the bearish candles, so they were closing green. So every other sector closed with strong bearish engulfing, or as in energy case, it was a confirmation of a bearish engulfing. So what we are expecting these sectors to go down at least for one more week, and it is not absolutely clear whether whether technology and consumer discretionary would be able to keep the index afloat. If we add here transportation, well, the picture might become very gloomy. So by the way, we shared the PDI weekly report earlier today, and it's worth to have a look there. All right, so let's have a look at some major stocks that closed for different sectors. Let's start with healthcare. So the healthcare, the Johnson & Johnson, we are seeing this is a strong bearish continuation candle on the weekly frame, and the chances for J&J to go further down are fairly strong. And note that the stock also lost, this is a weekly chart, the stock also lost support at the 50-week moving average, and closed to like the 4 weeks below this level. So the chances are fairly high to make it lower. So the next one, the Merck, and that's an interesting one. So we were seeing the big red candle closing below the 200 weekly moving average line, and it was followed by 3 candles which were tried hard, and especially the last 2, they tried to confirm a bottom here, but both like 3 of them failed, and this triple failure could be a very strong setup for a falling 3 methods candle formation, and this is what I'm talking about. So this is 3 failed attempts, and now the chances for a move lower here are fairly high. So if it happens, that wouldn't be surprising at all. So Pfizer had a chance to start a rally, but the last weekly candle unfortunately put an end on it. And if we look at Pfizer or on our bigger frame, so this is our outlook for Pfizer that we outlined in February 16, 2023, like almost 2 years ago, and we said this is this is the chart that we shared then. Then we said that, well, guys, be prepared for Pfizer to go to 25 or lower. Everyone laughed, obviously. But right now, what we are seeing, well, Pfizer is at 25, and even went a little lower here. So our theory right now that Pfizer is going to continue its demise, and what it wouldn't be surprising at all if Pfizer, in let's say in a couple of years or maybe even 1 year, will see a single-digit prices. So that even though it is surprising for everyone, this is the perspective, this is the technical perspective. So let's return back to what we are seeing here. So ResMed, it's going to go down most likely. So it is confirmed formation here, and now it is forming another bearish engulfing. So if we look at this particular formation on the weekly frame, so at the bigger thing, so this could be a head and shoulders formation, and with obviously if it breaks through this support line, 20 days EMA, 20 weeks EMA, pardon, the green one, most likely it will go down below and find support somewhere around 200. Well, it looks like it is a very good possibility for here. So United Health, the next one is a strong bearish engulfing, very strong, supported technically, and the move lower for next. I'm talking about this monthly frame. So if this is on the weekly chart, if we look at the weekly chart, so weekly chart is also very bearish, and the chances for the next week to be a red week are fairly very high. And if we look at the United Health bigger picture, so this is the daily, this is the weekly, and this is the monthly. So the monthly has a good chance to form a bearish engulfing. If it does, it would be something like it did in December 23rd, and then it was the entire year of decline for the stock. And we remember that United Health has a fairly large weight in Dow Jones and other indices. All right, so let's return back to what we are seeing here. So Abbott Laboratories is also bearish and has a chance to move lower next week. All right, so the Walgreens is right now in single digit. When a couple of years ago we said, well, Walgreens has a good chance to move into a single digit stock, in single digit price stock. Now everyone was very skeptical. So right now it is happening, and if you can see here, so this is a very rare and very powerful bearish cross, 100 days, 100 months over 200 months moving averages. So I don't know how to treat it, and well, if WBA moves into and becomes a penny stock, well, it wouldn't be a surprise. Okay, so now let's move on to the next sector, which is financial. So what we are seeing here right away, so the weekly closure for Visa was fairly bearish and a bearish engulfing. The similar thing is happening for Goldman Sachs, and well, it wouldn't be surprising if we have a red week next week. MasterCard, well, it was trending for bearish engulfing, but decided to go with a hanging man or inverted hammer. We'll see how it goes next week. So far, nothing is very dangerous. Another thing that worth talking is Lowe's Corporation and Chubb Limited. They both formed bearish engulfing with big chances to move down next week. The same, by the way, happens for the Wells Fargo. And after a gravestone doji, we had a bearish engulfing. The chances for a move lower are fairly high, towards at least $70 per price per share. Okay, so moving on to the next to the industrials. So the Honeywell doesn't look very good. So the same thing is happening for the 3M. 3M. This is a 10-day chart. I put it here specifically because of this, for this particular formation. After strong bearish engulfing, the three failed attempt, which with the closure on Friday, next Friday. If it doesn't make above the at least 200 10-day moving average, well, that the stock will be going down. So similar things for Union Pacific, Caterpillar, Waste Management, and the RTX. So all of these are bearish for the next week, and the chances for the red candles are there. So Boeing, a very interesting stock. We have a clear hammer here, and the chances for a move down. So that hammer most likely puts an end for a rally that started a couple of weeks ago. And if we look at the Boeing chart here, we have it prepared. So this is our chart, and this is what we called on December 24th, almost a year ago. We said that that's it for rally for Boeing, and it's gonna be going down. And this is what's happening right now. So we made this call when Boeing was 260. Right now is what, 153. Well, it lost almost over 100 points over the course of a year, and that was quite an amazing call, especially if you followed it. Okay, so moving to the next one. This was Boeing, and this is consumer discretionary stuff. So what we are seeing here, that it's quite mixed. And Walmart and Costco, they are doing well, and there is no surprise if you see last year, if you see two organic chickens for $30, right now they are about 50, and I'm talking Canadian prices. Well, so maybe it's not a big surprise for the U.S. Costco, but that is what it is. So these two are doing fairly well, while the other, like Coca-Cola and Target, they are not so great, and especially Procter & Gamble, they had a very good chance for a red week next week. The same applies to the Kraft Heinz company. The Hershey company, well, that's an interesting story here. This was our call a couple of years ago in 2023, when we said after three black crowds, it would be a period of consolidation with a potential move further down. Well, right now the Hershey is it's the 174, but I wouldn't be surprised if it moves towards 120 or even into double digits. Well, it would take time, and as I say, this is a 2 month chart. All right, so this was a quick overview of the stocks and what we should expect next week. Well, if you like it and if you want this to be repeated in the following weeks, please say so. Share your likes and share the word around. Well, that's been a wrapper. Thank you, and happy trading, everyone.